Hi, everyone. Welcome back to another Life by the Beach. We're here talking about buying a home on the Space Coast of Florida, and we have Heather Myers, who is our lending expert. She is with the mortgage firm in Melbourne, and she is going to, if you didn't watch our last episode, please go back and watch it. If you're a first-time home buyer or wondering about first-time home buyers, we talked about that, but today we're going to be talking about financing high-end homes for like a luxury buyer or more in that luxury price point, what they need to pay attention to and what they need to do. Heather lends all these products, first-time home buyer, through the luxury and the jumbo products, correct?
Yeah. That's correct.
Okay, so we're going to start off with what defines a jumbo loan? How does it differ from a conventional loan in terms of requirements and rates?
Yep. So a jumbo loan is still going to be a conventional loan, right?
Okay.
So the word term jumbo.
Oh.
The more you know.
See, look, I learned something today after 17 years.
Yep. So jumbo just essentially means it's over the conforming loan limit.
Okay.
Here in Brevard County, that loan limit has been increased. Every year we see it go up and up and up.
Yeah.
It's now 806,500. So anything over that is going to, create in what's called
And that's the amount of the purchase or the amount of the loan?
The loan.
Okay.
Yep. So in our world, everything is based on essentially loan amount.
Okay.
Your world, obviously different.
Yeah. Okay. All right. Perfect. So when you get a jumbo loan, what changes? Like you said, it's just really a term. It's still conventional, which I don't know. But the rate sometimes is different, correct?
Yeah. So, it can vary, right? So depending on the program that we have, sometimes it can be a little less, sometimes not. It truly just depends, along with like down payment requirements and things like that. On average, you're probably looking at 20%, especially for rate.
Okay.
Yes.
To get the best rate.
Yes. There are programs that will go down a lot, but you're going to pay a premium rate for that.
Okay. All right. Good to know. So we just talked about down payment. You just see, look.
Skipped ahead.
We skipped ahead. I do that sometimes. So are there specialized mortgage products designed specifically for high net worth individuals or self-employed buyers?
Yes.
Okay.
So we have a lot of different things, right? So, we have for clients who have a lot of assets, but not a lot of income.
Yeah.
We have what's called an asset depletion loan. And what that does is it's a calculation based on your assets that you have divided by 240 months.
Okay.
And what that does is that allows us to use that amount as your monthly income, right?
Okay.
So say you have $1 million in assets, and that calculation, you're looking at about, a little over $4,000 a month of income.
Okay.
Give or take. Obviously each person has, a different financial, portfolio.
Right.
But that's kind of how that asset depletion loan is structured.
And that's really good for like somebody who's retired and is no longer getting income, especially, 20 years ago, whatever, people had big pensions and things like that, but now they don't, and they have their assets and they're living off maybe their interest from their assets or whatever.
And even with, traditional conventional loans, we have clients all the time. We work very closely with their financial advisors, and if they have, certain types of accounts, they can set up a monthly distribution.
Okay.
So, showing that they have that income will continue, or they can at least take it out for 3 years.
Okay.
Sometimes, they can afford it, but
Yeah.
they don't have the income to prove it. So, we look at the, client's financial picture and say, well, you can talk to your financial advisor, and if we can get an income distribution letter from whatever one of your accounts per X amount per month, we can structure it for them that way as well.
Okay, that's really good to know. Yeah, because I always wondered what happens with people who have like a lot of cash and a lot of money and investments, but they don't have a job or income to show.
Yeah, there's a loan for everyone. Another example, we have bank statement loans, right?
Okay.
So these are for self-employed, bank statement loans, profit and loss loans.
Yeah.
But we can do calculations for people who are self-employed and calculate it based on their deposits into their business account.
Which is good, because if you're self-employed, usually you're trying to minimize, your tax basis. Yeah.
And it's, and we get it, right?
Yeah.
Everybody, there's, you do things for a reason. You're a business owner for a reason.
Yeah.
But that doesn't automatically, it's not an out, right? So you can still get approved for a loan. We just have to do it a little bit differently. Granted, those products typically have a little bit of a hit towards pricing.
Yeah.
But it's just kind of part of it. If you can't qualify traditionally, but you can still get a loan.
Yeah. Well, that's good to know. That's awesome.
Another thing actually too, doctors, right?
Oh, yeah.
So it kind of brings me back to, doctors, new doctors, established doctors. We have programs for them as well that they can borrow up to $1.5 million with $0 down and no mortgage insurance.
Oh.
It's huge.
Especially for a new doctor because they haven't, Yeah,
no,
because they obviously have they have a career coming. They're going to be earning, but they don't have anything yet. They probably have medical school debt and all that type of thing.
It's a fantastic product.
That's good to know. I didn't know you had.
Yep.
See how I look, Dr. Loans.
Dr. Loans.
If you're a doctor, call Heather. Okay, and how do assets and liquidity factor into the underwriting process?
Yeah, super important, right? So when you're buying high-end luxury, whatever, we need to source where those down payments are coming from.
Yeah.
And we need to be able to see that you can take those funds and use them for down payments.
Yeah.
Another, piece to that is when you buy a higher priced home, you may need to show reserves, right? And if you own more than one home as well, you'll need to show reserves that you can pay that principal, interest, taxes, insurance for new property and other properties as well. So depending on what that looks like is how much so if you're
buying a second home or a third home or whatever, okay.
You'll just need to show that you can at least make those payments for X amount of time.
Okay, good to know. So obviously a lot of wealthy individuals, they have money in multiple different brokerages or multiple different places. And also a lot of times they're very private with what their actual assets or their portfolio holds. So what do they need to provide you on your end in order to get the loan?
Typically we need to see, to include it as, sourceable funds.
Yes.
We need to see at least 2 months of their asset statements. So whether that be a quarterly statement that we have to get or, 2 monthly statements, we will need to see those, review those, make sure that it's, assets that we can use, right? Some people can't take the funds out yet, or it may not be the time, in their life where they're able to take it without a penalty. We have to be able to calculate that as well.
Okay.
And knowing too, even though sometimes people can have, a lot of assets, they may not truly know how those assets are held, right? So,
that's interesting. Yeah.
Yeah. So me personally, I was selling my house, a couple of years ago, and client put an offer in, me being the seller, not being kind of involved in the transaction in any other way. It was in an account that had a huge tax liability if they were to take it out.
Oh.
So, they were like, oh, put in the offer, everything was great. And then they realized that the tax implication that they were going to have, they decided to not.
Yeah.
So I've since that moment, I've kind of educated a lot of the agents that I work with.
Yeah.
When you have even just a regular old cash buyer, no financing needed, educate them and make sure that they know, it could be, do you want to take the funds out of this account?
Right.
Do you not? Because it could make a difference,
Right. And I think that's super important because one of the things that you do, and not all lenders do, is you do a full pre-approval. When someone comes to you, you're getting all that information and issuing what's called a pre-approval, which is different than a pre-qualification.
Yes.
Yes.
So I always tell my clients, they're like, why do you need all this information and whatnot?
Yeah.
So the difference between a pre-qualification versus a pre-approval is when I am talking to someone on the phone and I'm collecting all their information.
Yeah.
Pre-qualification is me gathering all the information, putting it in my system, pulling credit. It's all verbal, right?
Right.
So based on stated information that you've given me, I can say, I believe I can make this loan work, right? And people still make offers with them, and that's fine.
Right.
But what makes your offer so much stronger is that full pre-approval. That means that we are taking, so if you're telling me that you make $150,000 a year, I'm going to have either an offer letter or pay stubs or a W-2
something
to prove it. So I have something to back it up. Same thing with your assets. I've seen a statement. I've verified it. It's just all, proven information.
It's a much higher level than the pre-qual.
Yes.
And you can feel much more confident as a seller or a listing agent when you have a pre-approval.
Absolutely.
Yeah, that person is ready to go. Okay. And also, this is not on here, but sometimes people want to, for tax reasons or whatever, get a loan even though they could pay cash. So it's also good. Like, they may not be required. They may put in an offer that is a cash offer. So that means they can pay cash, and we're not requiring the pre-approval or the pre-qual before, but then they go ahead and get a loan for whatever other reason, especially when the rates were low. That was true.
Yeah. And people still do it. You know what I mean? Like, I have clients all the time, and they're like, you look at their assets and you're like, okay, they're going to go through with this whole loan process. But there are tax benefits to purchasing a home. People are always looking to reduce that tax, liability, and that is one of them.
Yeah, so that's true. What should affluent clients know about using investment income trusts or other complex financial structures in the mortgage process?
Yep. So that being said, a big piece to a pre-approval is their tax returns.
Yeah.
And having all pages to a tax return. Because, when you look at the first 2 pages, you're like, okay, great. But in a tax return, there's schedules, right? So specifically in this case, the Schedule B and Schedule D will kind of break those down, that information down for us. Lenders are cautious by using that type of income because they can fluctuate, right? We want to be able to see that, you've had that income stream for at least 2 years and that you still have those accounts active so that they will continue.
Okay. And can you buy a property if most of your stuff is held in, most of your financial assets are held in trust? Can you buy the property directly in the trust when you're getting a loan, or do you have to get the loan and then move the property into a trust?
We can do it in the process. It just has to be reviewed. That trust has to be reviewed to make sure that you're allowed to do that. Right?
Okay.
So we don't make the rules with the trust. The trust that you've already, had written up is going to tell us whether we can do that or not. Okay.
That's interesting. It's a question I had. Yeah. I didn't know. I was always like, a lot of people move the property into the trust after the fact. And, they're still, they own the trust, or the trust is their trust, but they'll get the loan and then do it. Yep. Are there strategic lending options or tax considerations these buyers should discuss with both their lender and financial advisor? Yeah. So I always tell, I work a lot with clients and their financial advisor. Yeah. Right. So there are complex income, different things like that. And their financial advisor probably knows them better than anybody else. They know exactly what their financial picture looks like there are tax, benefits and different things like that, opportunity costs, buying at a lower interest rate. So there are strategic lending options and tax considerations for high net worth clients. Borrowers, borrowing at a lower interest rate more than what, they can earn with their investments. So maybe buying the rate down, things like that might be a good strategy. And their financial advisor might coordinate with you, do we want to buy the rate down? What's the cost of that? Yep. Is that something that we consider? And especially keeping funds, invested so that their, portfolio can grow and different things like that. Yeah. Tax deductions, having a mortgage over, like we talked before, having a mortgage over buying a property cash. Yeah. Well, and I think right now, and by the time this airs, who knows what the financial or the economy will look like. But right now, with the stock market in so much flux, and people are worried about, well, I don't want to sell my assets. I don't want to sell my stocks right now to buy a house because the stock market has gone down, and I don't feel comfortable doing that right now. So instead, they're like, what other options do I have? Well, a great option is get a mortgage right now. Get a mortgage now, and if something changes in the future, you don't want to hold the mortgage, you can pay it off. But for right now, that allows you to keep your money invested in the stock market. You don't have to take that hit of selling while the stock market's low. And that brings me to another point. In that case, say you don't want to pay cash for it now, but you have the funds and you want to wait till that, things go up or change or whatever, we can do what's called a recast. Okay. And so whether you get
decide to wait, get money from that point.
Yeah.
You sell another property, you win the lottery, whatever it may be.
Please.
You can do what's called a mortgage recast.
Okay.
And that will allow you to get a mortgage now. And in the future, you can re-amortize the loan. So your interest rate's going to stay the same. So instead of making just a principal reduction on your loan, your payment will then go down. So rate stays the same. You make the principal reduction essentially in that recast process, and that way your payment gets lower from that large
which is
reduction.
A great option for someone who's selling a home somewhere else. It doesn't know when, or they're planning to sell in a few years. They're going to have both homes. They're planning to retire in 3 to 5 years, let's say, and they're buying a home now here, and they're going to start coming part-time or something like that. And then in 3 to 5 years, when they sell that home, they can go through the recast
So
process.
any type of conventional loan, anyone can do a recast. And honestly, I think it's a fantastic option for those in a situation like that.
Okay, good to know. Good to know. All right. Is there anything else that we missed that you had to talk about for high wealth individuals?
There's a product for everybody.
Yeah.
Whether you're buying, your first home, vacation homes, sit down, let's have a conversation. We can talk about it and find out what fits your needs, specifically. It's not, one size fits all. We have options that will, could make better financial sense working with, your real estate agent, your financial advisor. We can make this a smooth process.
Okay, that's great to know. So I highly recommend Heather. Give Heather a call if you're looking to, and you can also text her, if you're looking to find out more about buying a home in the area and you want to talk about your mortgage options. Heather can help, and she's great. And Heather, how do they reach you?
Yep, you can reach me at 321-446-4000.
Okay, perfect. All right, and let me know if you have any questions on buying a home, and we will talk to you next time. Cheers.
Bye.